Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, so we have shifted into the September contract. You get a little bit of an artificial hop on the continuation chart, and we've gone ahead and printed 44.02 half on the September contract. So it's a lot of it's a function of the roll into September, but what is not a function of the roll is the consolidation and compression that we saw throughout the month of April into the month of May that retested that 50-day and is now initially broke out, leveled off again, and is not to this degree, but is certainly riding the upper band on whatever contract you look at. We've got CPI in about 35 minutes, so this is going to be short and sweet. Whether there's a continuation of this move in a big way or whether you have some kind of a reversal, we'll see what happens. You've got CPI today, you've got the Fed announcement tomorrow, you got PPI tomorrow. So there are some very big markers this week. Yesterday, they kind of shelved it for a while, and then they decided, look, we want to go ahead and get into it, and we want to take it higher, and they did. And, closing it, darn near 4,400. Just one of those really sleepy trend up midday into afternoon into the close that if you fight it, you're going to be just very, very frustrated. It's easier just to go with the flow. So hourly chart, again, forget about the gap. That's a byproduct of the roll, but base hop. Testing hourly mid here. 43.88 as like I said, as we're about to get into CPI. So if there's an upside reaction to CPI, then what you want to see out of the bulls is you need to see 4,400 seal off as support. You want to see that close above 4,400, maintain it. What you don't want to see is what you've typically seen in these situations, which is spike high, rejection down low. If you're the bears, that's exactly what you want. You want to plant your flag up at 4,400 and say, look, that's all we're doing here, or wherever the spike reaction high is off of CPI. But then you've really got to bring it in. This is not bringing it in. Getting back into the weekly pivot where you started yesterday, that's bringing it in. So if you were able to accomplish that, close it somewhere down there today, I think that would be a victory. But then you're right back at it tomorrow because you've got PPI in the morning and you got Fed. You've got the FOMC announcement at 2 o'clock, which is, obviously what everybody is really waiting for. So, as mentioned, hourly mid-band 43.88. Volume weighted average price, proprietary moving average are both sitting at 43.95. You've got 44.02 half Globex high. The Globex range is only 15.25 handles. So, pre-CPI, all right? Obviously, the CPI reaction is going to play into that. So we're in wait-and-see mode. We got 35 minutes. What does CPI do? Those are the key areas. Now, just as far as if we head up and we keep going, you got to look at 44.33, 44, 45, 44.52 on the upside. On the downside, close it below the weekly pivot. Until you do that, bears, nobody's going to take you seriously. And people are keep coming in and buying dips because they think it's all over. Whether you agree or disagree, really doesn't matter. Right now, hourly midband, whether you're talking about the June contract or the September contract, is a champ. Support here, here, here. I don't know. We'll see. It's trying. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.